Hey guys, welcome back. We're talking technicals in this series of videos, specifically chart patterns that you can use, hopefully, to make more money in the markets. In this specific video, we're going to talk about trend lines. Now, interestingly about trend lines, if you're ever in a pub with a group of traders and you want to have a little bit of fun, go in there and say that you must draw trend lines this way. It's basically like igniting a fuse and just watch the whole lot go up. Everyone's got an opinion on this. This is the way I do it. I don't even know if this is right or wrong. I don't even care. If it makes some money out of it, that's what it's all about, right, guys? It's not about being right or wrong. It's about making money in the markets. If you agree with what I say in this video, give me a comment below. If you disagree and you have a better way of doing it, would love to hear from you because always open to ideas. So trend lines. What is a trend line? What is it all about? So you've basically got this scenario here, okay? I'm simplifying it, appreciate that. In the real world, we never get these symmetrical patterns, which is what we've got to be careful of when we're talking about patterns on whiteboards and stuff. But the theory is that you have what's known as a trend line. So this is a line that is drawn either up or down that keeps price in control or in that boundary. So in this case, we've got an uptrend. We come down and we're tagging the lower trend line here, and it's an uptrend line and it's kind of pushing price up. The steeper it is, obviously if we've got a really kind of steep one, then we can do that. The more aggressive the trend is, the shallower it is, the less aggressive the trend is. So we want to find something that is reasonably steep, but not so steep that it becomes far too aggressive. So what's the point in it? Why do we do it? Well, there's a couple of ways of looking at it. For me, I like to look at it that it's kind of framing the trade. It's basically saying, hey, you know what? We're in an uptrend at the moment while price is still above that trend line, and we can extrapolate. The point is of having a trend line is you can extrapolate that out as far as you like and say, while price is above that trend line, I'm going to stay long, I'm going to stay bullish, I'm going to look for buys, however you want to position. And the other way of doing it, which is how a lot of traders will do it, is that they will buy every time you come down and you tag that trend line. So the point is, as the price moves up, it does whatever it does. I mean, this may well go to like right up here and then come back down again. It doesn't matter what it's doing to the upside. The point is you're only interested in this section here, which is the uptrend line in this example, obviously vice versa for a downtrend line, and you're looking to buy when it comes in to that level. Now, the controversy comes in with trend lines is that how do you draw them? It's all very well saying, listen, I buy when it touches the trend line, all very well and good, but I'll try to draw this as best as I can, but I'm not an artist. Fortunately, my trading is better than my drawing. So okay, let's go with that. You're going to get the idea, hopefully. So we've got a little bit of an uptrend here. If you had a moving average, you would guess that it would be doing that, wouldn't it? So we'll call that an uptrend. Bear with me on that one. Right, some people will say, hey, no, you must draw your trend line on the lows. Must draw at the points. So this would be your trend line here. Okay, it's got to be on the points. You can't have it. No, it must be. And then someone else will come along and they'll say, well, you know what? As she's trying to use a green for this, it's just a rough guide. You try to get as many points as you can in with it, and that's your uptrend line. And it's interesting to see, as anything in trading, guys, don't let anyone tell you there's a right or wrong way to do it. If someone's making money out of that, then that's the right way to do it. If they're not making money out of that, then it's not the right way to do it, is it? It's about making money at the end of the day. I like, personally, again, agree or disagree with me down below, this method, because I think that people don't really care about each exact point. I don't think that buyers and sellers are that focused on a specific price point. I think the whole theory of it is that as supply demand is pushing and you've got a bit more a bit more supply coming in, it pushes, then demand flips and the seesaw turns and it sort of goes the other way. As long as it's within that kind of area, that's close enough. Now, of course, if you're using it as a strategy and you're saying, listen, I'm going to buy every time it touches the lower, you're going to be a little bit in trouble with this. So you kind of got to adjust your strategy to suit, but I like doing that as opposed to that, because the point of this is, and again, give me a sort of comment or agreement or disagreement. I'd love to hear your argument, especially if you like to draw actual pinnacles, why you think that's a really good way of doing it. But my point is, in fact, I've done it again, haven't I? There. The point is, this doesn't take much to change the whole trend line. So if we've had that, and in fact, let's leave that one on there, right? That's point one. You know, let's say now, for example, that it went even lower. Let me get a blue pen out here. Got enough pens here in my hand. Let's say that it just pushed lower here, and that was what happened. That wouldn't take a lot, would it? You know, depending on what market it is, of course, and what time of day it is. But to get that kind of extra 10, 15 tick move wouldn't really take a lot, wouldn't take a lot of volume. But that changes, if someone's drawing it exactly on the line, that changes the angle of the trend line dramatically. And when you extrapolate that out to the rest of the month or the week or the year, whatever it may be, all of a sudden you've got a huge difference. So if you're trying to buy it at the bottom of a trend, you're kind of buying it there, or you're buying it there, all because of what happened back here, which actually wasn't really that significant. Whereas if you're taking a kind of a mean of the low, sorry, and you're just gauging it by eye, yes, you can't use it as an exact level, but you can still frame your trade and kind of get a pattern of feel of where the market may go if it hits that trend and bounces off it. All right, guys, that is trend. Those are trend lines. It's same with a downtrend. We can quickly draw it, but I think you kind of get the idea. You know, if we're in a downtrend here, we would draw a trend. That's the worst ever trend line, but you get the idea. We would draw a trend line there, and then we'd look to sell it there. That's the theory of it. I'm oversimplifying it. Accept that. If you have any thoughts on that, again, I'd love to hear what you've got to say about these, because this stuff split the trading community massively. And if you like this video, give it a thumbs up. If you want to hear more, see more videos like this from me, hit the subscribe button. In the next couple of weeks, couple of months, got loads more coming. Technicals, strategy, discipline, psychology, all good stuff to make you more money in the markets. Take care.